Hello everyone, welcome to Officer 24/7. My name is Niharika Bhatnagar and this is our YouTube channel GIB CIB English Medium. I hope I am audible as well as clearly visible right now. Everybody, please confirm and first of all share the session, like the session and subscribe to the channel right away. Our session has officially begun everyone. Everybody please confirm if I'm audible as well as clearly visible. Let's begin with the session right away. Okay, so let's continue further, everyone. First of all, thank you so much for being there, and I hope your preparation for ABFM is going well. And today we'll be taking up the specific session on the entire ABFM. That means you have 4 specific modules starting from at 6 p.m. We are starting with the first one, where I'm sharing the specific area of our module B and C, followed by it would be taken by Aarti ma'am, who would be taking the module A and D. Everybody, and also after the completion of the session, everyone, you will find it in the description. There's a description. In the description there's something called virtual library. Go on to the virtual library to get the PDFs of these specific classes, everyone. Okay, here comes the first question related to the module. I started with module B first and then I'll start with module C. I've given it separately so that you can have that particular clarity regarding what kind of questions are asked and from which module. Okay, everyone, which of the following is a limitation of sensitivity analysis? Everyone, according to you, it considers all variables simultaneously. It only shows the NPV and changes one variable at a time. Or when we talk about it, requires no assumption about the project, or it does not help in risk management. See, there are 2 points, sensitivity and scenario. So when we talk about scenario, it takes everything in concern. Okay? While when we talk about the specific area of the scenario analysis, you cover every single variable. Multiple variables are connected and thus they are taken together. But when we talk about the specific area of sensitivity, it takes one particular variable at a time and its impact on our working altogether. Everybody, thank you so much. Please share the session and like the session as well. If this session is useful, please go ahead and share it among your peers. Now in this case, what's going to be the answer, everyone? The answer in this question is actually B. It only shows the NPV and the changes in one variable at a time. Next question. Which of the following is not a characteristic of simulation analysis? It allows for the analysis of uncertainty in project variables. It only works with NPV and IRR projects. It is often computationally intensive, requiring computer simulations, or it is useful for handling projects with multiple interdependent variables. Everyone, simulation is similar to the actual particular situation is created so that we can understand that specific area. ठीक है ना? Everyone, when we talk about simulation, simulation is basically creating a particular situation similar to what is exactly happening there as well. So in this case, what's going to be the answer, everyone? Okay, the correct answer in this case is actually B. It only works when NPV and IRR as a project criteria are available. Okay, so this is it. Which of the following is not a characteristic? This is not a characteristics. It allows the analysis of uncertainty. It helps because it creates all those specific areas which are similar to the reality there. Then what's the next part? It is often computationally intensive, requiring computer simulations. You do that part as well, and it is useful when you are looking at a project where are interdependent variables. Normally almost every variable is interdependent. This happens in your scenario analysis as well. Only sensitivity talks about the fact that देखिए, everything has to be understood as a separate variable with a separate identity. Otherwise, everywhere else you will find there is no separate identity to it. ठीक है? चलिए, now let's move on to the next point. Which of the following is true about the simulation analysis in the evaluation, everyone? Which one is actually true? It relies entirely on subjective assumptions made by the decision maker. Then the next part is it generates a single deterministic outcome based on input variables. It simulates a large number of scenarios to assess the likelihood of different outcomes. And next part is it is most effective when dealing with simple or low variance projects. Everyone? When we talk about the specific area of simulation analysis. When we talk about the simulation analysis there, it works on this basis only, na? So basically when we talk about simulation analysis, okay, I'm getting the answer as C there. Everyone else, please go ahead and answer. When we talk about simulation analysis, what happens in this case? In this case, what happens exactly is it simulates a large number of scenarios. They look into the multiple scenarios, what can happen and how they are looking forward to it to assess the likelihood. You are trying to find out what will exactly happen when these things happen on a realistic basis, right? Next part, when evaluating a decision tree, how is its expected value of each outcome calculated? Decision tree is basically what? You have probabilistic method. You look at this, if things happen, yes, if things happen, no, and if yes happens, these are the outcomes, and this is if no happens, these are the outcomes. Based upon this, they create branches. That is why it is called decision tree. So by summing up the NPV, by multiplying the reward of each outcome by associated probability, or considering the cost of each alternative, or choosing the decisions with highest probability. When we talk about decision making, we are looking at everything from the point of view of net present value of each outcome. We are multiplying it in order to find out what is the particular possibility of something that is happening in the business. Okay. Then which of the following statements is true about the evaluation step of decision tree? Evaluation starts from the first branch and moves to the last. Evaluation involves discarding all branches with negative NPV, or evaluation involves calculating the estimated NPV at each node and selecting the decision with the highest value. Last is the evaluation is done randomly to consider all the possible scenarios. When we talk about decision tree analysis, everyone, decision tree is purely based upon the fact that it is evaluating the specific NPV at each node. As I told you, since you are talking about this NPV of happening, NPV of not happening, then every NPV, the net present value, is multiplied by the probability of happening and not happening of the event. That gives you a total valuation. Okay? So in this case, it is at the each value that we consider it. Now comes in a CVP analysis, what is the effect of pricing on break even point? What is break even point, everyone? Break even point. Everybody please share the session, like the session and subscribe the channel as well. Shiba ma'am, in this case, this is for the answer for the sixth one. Sorry, in terms of CVP analysis. In terms of cost volume profit analysis, what happens, everyone? Higher pricing increases the break-even point. Higher pricing decreases the break-even point. Pricing does not impact, or higher pricing causes no change in profitability. Pricing always impacts our profitability. है ना? So what happens in this case, everyone? CVP analysis says what is the effect of pricing on break-even point. Break-even point is what? Break-even says break-even point is basically the situation where I can say it is based upon no profit, no loss. No profit, no loss matlab the particular point at which whatever money we are putting into the business, that money is basically something that we get as a return. Okay? For example, if I put 10K into the business, I am putting 10,000 into the business, everyone. So what happens if I put 10,000? By the end of that particular thing, I have the moment I recover my expense completely, this is my total expense and this is the income. The moment my income is equal to coverage of entire expense, this is called the point of break even. Okay? So whenever we talk about break even point, what happens when the pricing increases? In this case, see, if you increase your selling price, then what will happen? The amount that you have spent on that particular thing can be recovered early. For example, if I was making a profit of 10 rupees earlier per unit, now by selling more, I've made it to 80. For example, I just increased my price way too much. So it is at 80 right now. So I can recover whatever money I spent in the business way early. That is why in this case, I can say when we increase the price, we have our more profit. When the profit is more, then higher pricing decreases the break-even point. Acha, break-even point can be calculated based upon whatever fixed cost is there divided by contribution. Okay, how does it work, everyone? Fixed cost is the cost that you have to compulsorily recover. So how does it start even? Let me give you that one particular very important thing. I've been telling it in every single session that I have taken up. That is, first of all, you take sales. From that, you minus the variable cost. What you're left with is contribution. Matlab, this is the first level of money that you have to recover. After you have recovered contribution, what happens? After recovery of the contribution, next part is your fixed cost. So everybody has to recover their fixed cost. Then only we can say that the business is having what? This is the situation when the company has made their returns at least. That is why, so you have to recover at least the fixed cost. If this is zero, that is where you have the break even point, when you have recovered all the expenses that you have incurred. Okay, so break even point is actually a situation when you have recovered all your profits, all your expenses, and for that what you can do, increase your profits. If you earn that income beforehand, then you have more income. Next point, everyone, the opportunity cost. Ma'am, I can see your messages. The opportunity cost of labor should be considered in the cost of setup. When, everyone, opportunity cost of labor should be considered as a cost of setup. When opportunity cost is what? Next best alternative use. That means I had another opportunity where I could put it, and since I am putting it here, I am losing certain amount of money, है ना? So in this case, temporary labor is hired for setup. No, if they are temporary labor is hired for setup, it is required. It is something which I can say it's a relevant costing. This is not the point. Permanent labor is used for setup who are otherwise fully engaged in production and additional labor is unavailable. Only when overtime work is possible or the setup cost is low compared to production cost. This doesn't talk about any of those things. So the only this is also not the point. The permanent labor is used for setup who are otherwise fully engaged in production. This is the point. Permanent labor is something which is already engaged in a lot of work. So when it gets engaged in this specific area, that means we are putting them here. We are giving them the specific work altogether. Na? Done? Then comes the answer is B, everyone. Next point. Just removing this part. Here comes the next question. Acha, everyone, after the completion of this session, you can also find the PDF of this session. And for that, what you need to do is you need to go on to our virtual library. You will find it in the description there. If you go into the description, you will find it. Okay. If I open the specific area of the description of this particular area, in that the very first thing they have given it in the beginning only, CAIIB virtual library free for all. In this case, you will find all the specific sessions that we have taken, the summary of those sessions and everything in detail there. So if you are planning to look forward towards the PDF of these, then you can find it there itself. Okay. Next point. When we talk about this area, what do we have? A firm details are as follows. You have your value as sales minus your variable cost is what? You have got 24 lakh as your sales. From that, remove 50% of it. 50% of it is 12 lakh, everyone. This is a question from the IBF book. What you're left with is 12 lakh. Then it has borrowed 10 lakh. Matlab, in this case, when I look at the fixed cost, there is no specific fixed cost which is given, and its equity share capital fixed cost is 10 lakh. Okay. This is your 10 lakh. Everyone, whatever we are left with is earnings before interest and tax is barely 2 lakh. Matlab, the person has got barely 2 lakh left as earning before interest and tax. Then they said that in this case, your interest that you have to pay is 10 lakh at the rate 10%. That means your I is 1 lakh. Out of 2 lakh, 1 lakh is gone. So earnings before tax is barely 50,000. And when you, 1 lakh. And when you pay tax out of it, what will happen? Minus, you will have to do 50% of it. Okay, just a moment. I think this would be hidden a bit. So I am removing the entire portion. I hope this is visible right now. So minus 50%, that means remove 50,000 out of it. In this case, what are we left with? This is your 50,000, everyone. In this case, what do we have? Your financial leverage is EBIT upon EBT. Your EBIT is rupees 2 lakh, while your EBT is what? Everyone, your EBT is 1 lakh. Shiba ma'am, in this case, what would be your answer? In this case, the answer is actually 2 times. Answer is B. Then everyone, moving on to the next question. This is a question from our IIBF book. This is one of the examples there. Okay. Then everyone, is this visible? Okay. Now moving on to the next question. Look at this question. In this case, they are given the assertion. Assertion is what? Increasing borrowings without limit is a feasible strategy to maximize the financial leverage. Lenders are always willing to lend without constraints. Increasing borrowings without limit is a feasible strategy. Okay, everyone, when you are having a lot of loans, what will happen? When the loans are too much, the organization would be doomed. Why? Because when the organization takes a lot of loans, then the loan value will burden the organization to an extent that it cannot afford to pay those loans anymore. So that's one particular thing that will definitely happen. And lenders are always willing to lend without constraints. This is definitely not true. Why? Because if someone gives you a lot of loans, they would be expecting by what time you're returning the money back to them as well. So I think that is one part is there. But everyone, if you're looking at financial leverage, then the first part can be correct because you have to increase your loans so that you increase your level of operations. Everyone, that is one particular part, but you have to always look at the part of affordability. Okay, so in this case, I would say assertion might seem true, but reasoning is definitely false. So according to you, what's going to be the answer? Both assertion and reasoning are true. This is wrong. Both assertion and reasoning are true, but reason is not correct. This can be the point because the first part is slightly correct. Assertion is true, but the reason is false. This can also be true, in this case, because the reason is not correct. The reason, this reason is also not true. This is also not true because lenders are willing to lend without constraints. This is not possible. Why would someone give you the loans without any specific I would say without any specific vision to it? So that's correct, ma'am. The answer here would be C. Okay, assertion is true, but the reasoning is false. Because in this case, you can increase your money by financial leverage. You can increase your loans, but it should not be going without limit. And lenders are never ready to give so much of money without any constraints. Next point, statement 1. Preference shares are safer than equity for investors, but riskier than secured debts. And dividend payment on preference shares are always mandatory. Preference shares rank between equity and secured debts in terms of risk and return. Preference shares provide tax deductible returns for companies. And then is preference shares offer greater securities than all other forms of capital. Preference shares are equal to debt securities in terms of obligations. Everyone, what's going to be the answer? Preference shares are safer than equity. They are. Basically, they are covered as hybrid. Hybrid matlab anything which is between equity and debt. So it is slightly safer than equity, but not as safe as a debt. So dividend payment or preference are always mandatory. वैसे तो in this case there is one more pointer. Preference shares rank between equity and secured debts. Preference shares provide tax deductible returns to the companies. This is actually true. Preference shares offer greater security than all other forms. नहीं ऐसा नहीं है. It provides a greater security. And preferences are equivalent to debt instrument. They are not equal to this. So in this case, A part is correct. Basically, it ranks between the two. A is way better than any other area. So you're absolutely right, Jay Lakshmi ma'am. Very good. Everyone, oh, the answer is visible. Let me just hide it so that you can at least go ahead and try the question. Huh? In this question, what are they saying? चलिए. Now, in this case, they have talked about cumulative preference shares, redeemable preference shares, non-cumulative and perpetual. Next part is mandatory redemption within 20 years. It is true that the preference shares have to be paid off by maximum 20 years. So these are basically redeemable preference shares. So B should be 1 in this case. That is one particular part that I'm clear. Now that the first part is over, match the following can be asked in the examination. Okay, so non-cumulative preference shares. Non-cumulative means in which your dividend does not get accumulated. So what would be the point, everyone? Dividends are not carried if unpaid. This is true. Okay, cumulative means when if I'm not able to pay dividend in 1 year, the next year I'll pay dividend for this year as well as the next year. Okay, so that means in case you are not able to pay in 1 year, then both the things would be connected and you will get it in a combined form. So in this case, what's going to be the answer? A would be 2. Then we have perpetual preference shares. The preference shares in which we are basically looking forward to the money is not paid off that easily. It is for a long term. So it is issued by as a perpetual debt instrument. So this one was definitely wrong because perpetual term was there. So obviously D had a link with 4. So these were the 3 points where D had a link with 4, but A had a link with 2. So A2 is basically this. So we are left with just these two to look forward to. You know, B is 1. That is also true. Then C is 3. This is also true. And D is 4. So I think I'll go for A in this case. What's gonna be your answer? Shiva ma'am, very good. Abhi sir, correct. That is A. In this case, the correct answer is A. Okay. Now comes the next point. Just a moment. There are certain questions where we should definitely look forward to the hiding the answers there. Chali. Moving on to the next point, everyone. Which of the following is true regarding debentures? First part is debentures have no voting rights. Of course, they never have any voting rights. They have voting rights only in the class meetings of debentures. They are not the owners of the organization. Since they are not the owners of the organization, they do not have or they do not enjoy any voting rights. Perpetual bonds may be called call option, but no fixed maturity date exists. In this case, okay, everyone, perpetual bonds matlab the bonds in which remain invested for a long period of a time in a business. That is why they are called perpetual. है ना? So I think the second point is also correct. Perpetual means which stays in the business for a very long period. Then the next part is your secured debentures require appointment of the trustees, uh, if issued for more than 500 shareholders. Everyone, if you give a lot of loan to someone, you will try to keep a hold of the company so that they do not mercilessly use the funds that you have given to them. They should be answerable for all the funds that you have given to them. So technically, secured debentures require the appointment of trustees. They really need that trustees to be appointed so that there is no problem there. The convertible debentures always provide voting rights to the holders before conversion. This cannot happen. Only and only equity shareholders have they are the one who have that birthright to have the voting right. So this is the one which is definitely wrong. Very good, Shiba ma'am. You are going absolutely right. All the questions that you have answered till now, I think they're all correct. The answer is B. Okay, everyone, please go ahead and answer. And also, if you are new in this particular session, please go ahead and like the session, share the session, and subscribe to the channel right away, everyone. Match the following debentures features with their terms. Feature and terms. Everyone, another very important match the following. This says options for an early repayment, options for an early redemption, fixed repayment period, or when we have conversion into equity. This is very easy. If you look at this specific part, fixed conversion into equity is basically convertible debentures. The debentures which are ultimately converted into equity are called convertible. Convertible term means later on someday you will become shareholder of the company. That's the rule. So in this case, D is definitely 4. So there is only one point which is having D as 4. So you have got the point. So this is being lucky in the MCQs. See, you have got the particular answer without much efforts to do. Options for early repayment is basically call option, correct. When the company has all the rights to call people कि देखिए I have got the money, I would like to repay you. Then options for early redemption of the buy holder. मतलब the investor can come up to the company and say that everyone, I would like to repay you, I would like to repay you. ठीक है ना? Done. And the next part is fixed repayment period. The fixed repayment period is what? Fixed repayment period is redemption. Redemption matlab by what time you will be repaying that specific amount. The answer is A. Acha. Oh, the answer is visible. Just a moment. Hiding it from you. So you had many of you would have seen the question, but it's fine. I think when you look forward to all these questions and try to find out the points now, then the chances of that specific um, guessing the answer in the examination definitely becomes more clear. That is one particular part that I strongly agree upon. है ना? चलिए, now talking about the specific point further, foreign investors can freely invest in small scale industries, which they do in India under the FDI policy, under the foreign direct investment policy. What do they do, everyone? The government of India is basically looking forward towards what? They are looking forward, अच्छा ठीक है, FDI can freely invest in small scale industries. They can, but India has definitely got some policies to take care of. The government of India has removed all the sectoral restrictions for FDI investments. वैसे तो India actually had a lot of sectoral points there. That was because India had to save itself. But I don't think all the sectoral restrictions have been removed. A few of them could have been, but not all of them have been removed. So in this case, what's going to be the point, everyone? It is actually going to be, what point should be correct, everyone? I would say first one is true, but second one, the reasoning doesn't go with it. So it both A and R are correct, and R is the correct explanation. A is definitely wrong. Then B is basically both and R are true, but the second point is not true. You cannot just remove all those points of the, I think, see, everyone, there are restrictions. If you remove the restrictions, anybody can come and exploit our small scale industries. Indian small scale industries are already affected badly. So how can we just turn blind towards it? कि ठीक है ना, let's just remove all the particular points which affects it badly. So in this case, what's gonna be the point? The answer is C. A is definitely true, but R is definitely false. These kind of questions definitely takes a toll, because you get confused ki, acha, whether the point of that if the second part is not correct, is it the correct reasoning or not, or it's the wrong statement altogether, right? Everyone, here comes the next point. In terms of which of the following is not a feature of FDI policy in India? Everyone, FDI policy. The foreign investors, what do you mean by the FDI policy? Everyone, please share the session and like the session and subscribe to the channel right away, please. The automatic route requires prior approval from RBI. Agreed. Automatic rule has a specific thing called debilization remittance scheme, where one can actually send anything to India, outside India, up to that is $250,000. The government route requires approval from the Ministry of Finance. Is that true? Maybe it is or not. Not really. It is about Ministry of Finance. It is actually linked with FEMA. Then non-convertible preference shares under FDI policy are treated as debt instruments. And last is sector-specific caps may apply to certain FDI investments. That is 1 and 2, 2 and 3, 1 only, and 3 and 4. Everyone, what's going to be the correct? Which of the following is not a feature of FDI? FDI policy. No, if it is not a feature of FDI, then hold on. In this case, government route requires approval. If we talk about Ministry of Finance, it is tied up with FEMA and it works through that. That can be correct. Non-convertible preference shares are issued under FDI policy, are treated as debt instruments. It is also true, because ultimately these can be converted. These are preference is basically what? It's a kind of loan only. You know? So in this case, because it is hybrid in the form. It is not a complete loan, not a complete share even. So in this case, automatic rule does not require anything. Till the time you don't hit the automatic button, you are definitely not checked. That means up to $250,000. There is no specific limitation. So in this case, the answer is basically C only, everyone. C is basically 1 is the only thing which is wrong. Rest everything is correct. Abhi sir, you are going correct. Everybody, go ahead and answer. Keep on answering, everyone. Keep up the spirit and please share the session and like the session as well. Next question, it requires a little work there. The following information is regarding the XYZ company for the year ended 31st March 2022. The equity share capital is of 50 lakh, 12% bonds of 1000 each, 37 lakhs as there. Okay, and then they say sales is 84 lakhs, fixed cost is 6.96 excluding interest, and then we have the specific area of PV ratio is given and income tax is given. Always remember, if your PV is given and your contribution is not given, your variable cost is not given, then you can find your contribution directly based upon sales multiplied by PV ratio. Why? Because sales multiplied by contri divided by sales. This specific thing will give you contribution directly. So in this case, 84 lakh was your sales. On 84 lakh, find your contribution directly. That is 27.55%, everyone. 84 lakhs multiplied by 27.55. 84 lakhs multiplied by 27.55%. The answer comes out to be 2314200. This is what? This is the total amount of contribution that you can find in the question. This is quite important. Your contribution is 23,14,000. Once you have found your contribution, then remove the fixed cost out of it, everyone. The fixed cost is basically 6,96,000. ठीक है, that is minus 6,96,000, giving me a value of 16,18,000. Then remove 40% out of it. 40% is your taxation. So sales minus variable cost is equal to your contribution. From that, remove the fixed cost. You will get your fixed cost. After removing the fixed cost, what you get is your earning before interest and tax. Then you remove tax, it is after tax. Everyone, can you see the specific value? Take a moment and solve the question. Take a moment, everyone, and solve it up. Then everyone, what's the answer according to you? In this case, the answer is 1.38 times. In the examination, this can come as a no option question. It can come as an option based question as well, because in the examination, you have certain questions which will have no options. So be prepared for these kind of questions as well. Done? Chaliye. Now moving on to the next question. What's the next question, everyone? The next question is this. Which of the following statement is true about DFL? That is, regarding financial leverage, which among the following is actually true? A positive DFL implies that both EPS and EBIT move in the same direction. See, degree of financial leverage means that you take a lot of loans, and you take loans and it increases your scale of operations. ठीक है ना? So if you talk about scale of operations being increased, that is what we talk about this area. The DFL is always positive. Okay, it's going fine. Now the next part is DFL is always positive for firms operating below the break-even point, and negative DFL arises when EBT is negative, or when EBT equals fixed interest charges, DFL becomes undefined. 1 and 3 only, 1, 3 and 4, 2 and 4, and 1, 2, 3, 4. Everyone, what's going to be the correct answer? Degree of financial leverage there. 1, 4 and 3. Jayalakshmi ma'am. Achha, degree of financial leverage is what? If you take loans so that you can increase your operations. In this case, positive DFL means EPS and EBIT both move in the same direction. That is correct. Matlab, if your earning before interest and tax is increasing, your EBIT, earning before interest and tax is increasing, your earning per share, shareholder is also getting more money. This is actually correct. Then DFL is always positive. Nahi, if you take a lot of loans, it can go negative. For firms operating below break even matlab anyone who's already having negative situation before it reaches even the increase of scale of operations. Operating below break even point means the organization is even not able to cover their fixed costs. That means their earnings before interest and tax is already negative, or the company is facing a lot of losses. So in this case, negative DFL arises when EBT is negative. This is correct. 1, 3, and then when EBIT equals to earning before interest and tax is equal to fixed interest. When you pay this is also correct. When your EBIT becomes 0, ठीक है, then the entire thing EBT becomes 0, then it becomes undefined. Why? Because anything, what is the particular degree of financial leverage? That is EBIT upon EBT. The moment this TBT becomes 0, this is where the question says your overall value becomes undefined. This is actually a question in the book. Again, a very important area to look forward to. This is a question from our book itself. 1, 3, and 4. Everybody, the next question is here. There's a numerical question regarding degree of financial leverage. In this case, they say EBIT in the first case is given, EBIT in the second case is given, and interest is given, tax rate is given, and share outstanding is given. They are asking you to find the degree of financial leverage in this case. What's the formula for this? The formula for this is actually change in EPS divided by change in EBIT. That is percentage change in earning per share divided by percentage change in EBIT. Everyone, this is a lengthy question, but it can be covered in the examination as a case study. Let's do this question together. The question says your EBIT for the first year and EBIT for the second year. EBIT 1 and EBIT 2. How does it work? This part is 2 lakh and this part is 3 lakh. Then earnings before interest and tax. Remove your interest out of it. Interest is 50,000 and 50,000. The value here comes out to be 1,50,000 here and 2,50,000 here. Then they say remove the portion of tax. What's the tax? 40% of it. 15 fours are 60 and 25 is 1 lakh. This is your tax, everyone. Once you remove the tax, what are you left with?